Wednesday, March 6th. Market analysis, Stan Ehrlich. Good morning. Hey, sorry about yesterday. Apparently something went wrong with my audio and my voice did not get recorded. Hey, maybe that's a good thing. But hopefully it's working properly this morning. I'll double check after we're through. We just closed a gap that created on the way down yesterday in the spider. And we start out with stock market indexes, and I'm starting out with the spider. Very accurately, only a little while ago, when we got up to 512, that did the trick. And the high is just a tiny bit higher than that. Here we are at 1117. We've dropped about a full point straight down since we closed the gap. Now, gaps are almost always closed. This one was closed. That's fine and dandy on the spider. But we might see on other indexes like the Qs that the gap is not quite closed yet. We'll get there in a moment. So going back to the daily chart on the spider, and that's not what I wanted. Here we go. We have the gap closure, no problem. Now the Qs. There is still a gap here from a couple of days ago. That would be Monday to Tuesday. And today's high closes part of the gap, not much. And let's see if I can get a closer. No, I don't have that chart yet. So going to the E-mini. Oh, by the way, I still think the stock market indexes in a general sense are going to make some minor new lows very soon because of overbought conditions in the E-mini and the S&P spider. Not quite overbought in the other indexes, but very close. As you can see here on the QQQs, we got a very, very close, a 24 something, I'm pretty sure, but not 25 or higher. So it didn't qualify almost, not quite. Now, this correction I've been talking about for 2 or 3 weeks now hasn't happened yet. I thought yesterday we were going to get more downside move, and here we are above yesterday's highs. That doesn't really change much. It's a gap to close. I still think we're going to see lows lower than yesterday's lows very soon. And that's going to start to hit some more sell stops, start to make new lows for a longer period of time, like a full 2 weeks. And there's a gap below the market to consider closing from the high of the day on February 21 in the QQQ to the low of the day on February 22. So that's going to cause some more sell stops to get hit, and maybe the gap closure will be the end of the break, but that is actually the bare minimum downside expectation I have for the Qs. Frankly, I think it's going to get back into this support area, the trading range that we basically had in December, late December, and in January until around January 20th or 18th. Then it started to move out of that range. That's my real downside expectation. Okay, I'm going to go right to the NASDAQ futures daily, and there's no gap because this trades, 23 out of 24 hours a day. The QQQ and the spider for California time open at 6:30 in the morning and close at 1 o'clock in the afternoon. So it's closed 2/3 approximately of a 24-hour time frame, or even a bit more. Yeah, more. So gaps are much easier to occur when you have shorter trading hours, period. And because markets are becoming 24/7, and if they can think of 25/8, they probably would in order to get more money out of it. But that'll eliminate gaps forever if the market doesn't close. There's no gaps in forex, for instance, except on the weekends. And that probably will go away sometime in the future. That's just the trend of things. Now, the NASDAQ 5 minute chart got up to that level right there. That woulda, coulda, should have been maybe a gap because it was on the Qs, up a little higher, and it didn't close it, but it wasn't there because it was trades 23 hours a day. Nevertheless, so resistance area in general, and it's starting to work its way back down. So the first low to overcome, get lower than, is 17,962 on the NASDAQ March futures contract. Then the low of yesterday, which is going to start making new lows for, I think it's 9 days or something. I'm on my way down if that happens. I thought it was going to happen this morning. Well, very stubborn, very strong market so far. And we're going to bonds. Bond futures are making minor new highs again. It is looking slowly like the low we saw a couple of weeks ago was the low I was expecting to be a little later and a little lower. And also, unfortunately, I didn't get a buy signal out of the situation because it didn't get oversold. So be it. I am still, as I've been saying for many months, long-term bullish. I did look for some sort of a downside retracement, and I said that before this retracement happened, but it wasn't quite as much as I thought, and it happened a little sooner so far. But I'm bullish. Explanation point. 10-year notes, same commentary. No change of opinion. We are now approaching some resistance, and I'm going to go back to bonds. Probably should draw on a different resistance area, but it's the same story. It's getting up to price levels it was trading at before in, let's say, December, January. Some resistance. And here in the notes, it's a little bit more obvious, and I put some zones in for resistance areas. Exactly. Okay. So we're very close in notes and probably in the bonds, and that may turn it back down again. If that's true, it doesn't have to make new lows in bonds and notes in order to scare the stock market a little bit and help me get my lower lows in. And next is crude oil. Well, resistance is still trying to stop this rally. Now been 4 days, actually 5 or 6. The first time it got into the resistance, it closed down below it. Second time, same thing. But then we started getting more strength and a little bit more. And yesterday, it looked like it was going to start trending lower again. Well, we're right back up here, right around yesterday's highs at the moment. I still think it's topping out. We're not overbought, so I'm not going to get a bearish engulfing out of the ER sell signal out of this. But we'll see what happens. I'm expecting it to turn down, and for a pretty good move down, maybe a very large move down. Next, heating oil. Bear signal on top of the market. That's great. Still in the trade so far, up a little on the day. You can see my trailing stop, the yellow dotted line. It'll end up being a good trade and hopefully better than we have right now. I can't change my opinion. Still looking for the support level at lower levels down here at 2.4854 and down to maybe 23569 to be exact. Will be reached, and hopefully before I get out of the trade. Bearish. Next. Natural gas is somewhat the opposite. We got a buy signal here. We're still in the trade. We're close to the highs of the rally, but we're trying to push through the top of a support area that didn't actually hold that well. So if it stalls out at yesterday's highs, which yesterday it did, again, and can't close above that, and that would be about 2.006, it may just flip-flop, get us out of the trade, apparently with a small profit, and start to trend lower again. Intermediate to longer term, I got to look at the bearish situation. Short term, I'm crossing my fingers, which doesn't really work very often, that we're going to see more of a rally. But, you know, I've got my trade, I've got my protective stop in, and that's exactly what automated trading is all about. We'll see what happens. Unleaded gas. Up against resistance, which is so far stopping the rallies. We're now back below the resistance area a tiny bit. I want to see some new lows real soon here in order to perpetuate my bearish expectations. If we do see those new lows below 2.49, then we're going to work our way down to 2.2. Next chart. Gold. Wow. The 90 level for RSI is extreme, And we haven't seen a 90 RSI reading for a very long time. I've got to go back to this spike high, February of 22, 2 years. That's the last time I saw an RSI level at or a little bit above where we are right now. On top of that, every time we've been up into this approximate price range, which is to say 2170, 60s, 2160s, 70s, that'll do it. We've topped out. So here we are, super overbought, getting back to the old highs we saw before. I expect it to top out again. So I'm waiting for, hopefully, a bearish engulfing sell signal that'll be very much in the same ballpark as the one we had December 25, or December 5, I meant. Period. Any day now, literally any day now. Very, very soon, maybe yet this week. I wouldn't be surprised if it was still today. Next chart is silver. All right. We are high and last at the moment, making minor new highs, but we have everything we want for a bearish ER sell signal, except we're up on the day 0.515. If we turn around and close below yesterday's close, the moment we get below yesterday's close, we will turn red, an ER sell signal like this one, or hopefully this one or this one. It's a big sell signal in overbought condition, large trading range. Not that that is necessarily super important. It may very well be. Never tested the idea, but common sense tells me probably. But we're not lower on the day. That's all we need now. It's not necessarily resistance area. It doesn't have to be. Overbought, outside trading range, and a lower tick, especially close, generates my red bearish ER sell signals. So all I need now today is a break to a little lower on the day, and this will have a sell signal officially. Next, platinum. Keep your eyes on silver. Platinum pushing out of resistance a little bit. Still not overly impressed. It might start something on the upside, but I'm not real fond of saying that when I'm looking at sell signals in potentially gold and silver. Gold is overbought like crazy. We have everything we want in silver except for the lower close today. I think platinum is about to turn down, but mostly the reasoning is gold and silver are about to turn down. Next, high-grade copper. Rock in a hard spot. Maybe it'll get up to resistance again, turn back down. Maybe it'll get back to support again, turn back up again. I don't see why. Waiting for some signals. Today happens to be a bullish engulfing at the moment, so that implies it's going to go up a little bit more. It's not an ER buy signal because we weren't also oversold. That's the combination you need. Next, oversold, yes. Outside trading day, no, which is an engulfing no. But all we need to do is rally above yesterday's high, which doesn't look like it's hard to do. We're not that far down, just a little bit, 250. So I'm looking for soybeans to maybe come back up one more time. But you know, I've been talking about this thing for a long time. We have made now, in the last several days, new lows for 2 years. Support tried to hold, it didn't hold. We got below it, stayed below it. Oversold conditions caused a little bounce. We got that into resistance, fine. I cannot rule out new lows for the whole trend very, very soon. Now, there's still this little chance of one more rally, but I don't trust it. I don't think it's going to go very far. And I'm looking for big sell signals and a big new low and a trend down to continue in general. Oil, soybean oil. At support, we got a signal that did not work a couple of days ago. I think that was actually a false signal. Now, you can generate an ER signal during the morning session or during the session period, but if it doesn't close in the proper direction, and in the last few minutes maybe, it goes on the other side of the net change, the signal is canceled, but you would have had an ER1 entry for a scalp and an overnight, and the possibility of either a day trade's loss or profit already on the scalp. But if it's not out of the trade with a false signal based on the closing, it gets out on the close because the signal's no good on the close. It looked like it was going to have and did have at one time during the day a legitimate signal, but it has to be maintained, and almost always is maintained on the close, but sometimes it's not. And that was a couple of days ago in soybean oil. Now, at support, maybe we'll get a little bit more bounce out of this. Trend is obviously down. I just don't trust the rallies, but maybe a bounce. Looking for new lows relatively soon. I gotta say almost the exact same thing for soybean meal. We did get a signal a few days ago. It was good. I guess it was the same time that oil did. And we did get long, and we did have a profitable trade. It wasn't much at all, and we're out yesterday. Today's low is right back down to support. Unless something dramatic happens on the upside, both oil and meal look like they're about to go south, along with the beans, I think. Now corn. I'm sorry, was that oil I was talking about? Yes, I'm sorry. Way to cotton picks up. Something's wrong here. That's meal. That's oil. That's meal. I'm sorry. This is simply the fine-tuned 1 minute chart on meal. And there's the offset cup yesterday early. Trade did okay. Wasn't great. Green is green, better than red. And no other comments. Here's the daily data on corn. The bottom of the market was a bullish engulfing ER buy signal. It is stalling out in here. Remember, corn and grains in general, wheat included, I just don't see anything great yet. I know what to look for. It did start a little bit, and it's starting to fail again. Grains just don't look good as far as the bullish side is concerned. And I'm thinking this is going to start to make new lows real soon. At least we had a little run on the upside that worked out pretty good. And this is simply the 1 minute chart on corn showing you the details of the trade. Yeah, that's right. Okay. Not great, but green is green. Now, wheat. Yikes. We are down 19.5 cents lower, almost low and last, way into new low ground. Crash. Now oversold again. So kind of like my comment on beans earlier, which got underneath a support area and turned oversold, I would expect a rally very soon back up to the resistance to approximately, let's call it 553, 554, 555 maybe. And it could even get up to, I don't know, 570. But in that ballpark, 550, 570, I think it's going to stop rallying, turn around and make new lows again. Next chart is our December wheat, 1 minute. You can see this, I think, made only a cent or something. Very small profit. The scalp version and the overnight version of ER1 both did okay, pretty good. The ER3, we did buy the exact tick low on February 23rd. The next day we made lower lows, but at least for one day we bought the low of the day. And then it came up. We didn't raise our stop fast enough. We had an opportunity to do so, but at least it came up above where we bought it. So as it continued to drift down for the next 2.5 days, and finally we got hit on a big break, we didn't lose anything. We could have tightened our stop up. There was elbow room to do it. I didn't want to do that for you guys. I'm trying to use defaults or something very close to them. Next. daily cattle. We're still in this long-term trade. For a couple of weeks now, or a little less, we have had a flat STS stop, smart trailing stop STS, at 184.35, it looks like, give or take a tick or something. And until this market gets higher or goes up really fast on a very short-term rally, we're not going to see our stop move. But I'm pointing out that this is a huge, nice profit, considering our initial long position was 171, and this is 187. Next chart. Oh, by the way, cattle is at resistance. I have the feeling that it's going to be stalling out more and dropping and stopping us out, but that's just a personal opinion, it's a feeling, and you don't trade on hopium. Hope. Next. Hogs. Down in support again. Trend is up short term. Longer term, intermediate, let's call it neutral. There's a bias toward a huge resistance area stopping the rallies again and again, which so far has happened. So will this little support area hold? I don't know. Turning short-term bearish. Next, OJ, pennant formation developing. Downward slanting tops, relatively flat bottom. Excuse me, that's referred to as a flat bottom right triangle. And the flat sides are usually broken. You notice when it began, we got an ER official red sell signal. And we got one on the top of orange juice to the highest high back in November. And just before that, we got a great short sale for a few days in late October. So orange juice has been on the average very good to us. We're not in a trade right now, trying to figure out which way this pennant formation or right triangle is going to break out. They're close cousins. They're almost the same formation. Next, cocoa. Maybe double top. Really can't put my finger on this. We're overbought or were overbought. So I'm waiting for some signals and not getting it. I do think cocoa is on the verge of topping out, and I can't yet pinpoint the day that it either happened shortly ago or the day it does happen, if it turns red or green. This one would be red, of course. Sideways in coffee, big pennant formation, resistance stopping the rallies. Got to wait a little bit to see what develops. Next, sugar the sweet. Got oversold. No surprise, we're bouncing a little bit, not particularly aggressively. Don't have a lot to work with here. A little bit of resistance, slightly higher, but we came very, very close to that level on today's rally. And then we're going to go down to the low of the move here, and for many months, if it doesn't stop sliding, and that'd be 19.40 something. And we're 21.28 at the moment. Neutral to bearish. But oversold means you could bounce a little bit before you see those new lows. And cotton the rag might be building a top formation. I did draw in a telltale little bull trend line here, which is not going to be called a bull trend line if that formation does develop, but that's good enough for the moment. Let's see what we get here in the next week or so in cotton. And back to the spider and the 1 minute. When we closed the gap, we topped out almost exactly, slipped a little, not much, about a full point. And here we are starting to come back again. I still think this market's in the process of topping out in the stock market indexes. You have a great day. Profitable trading to you. Mañana.